Make money with life insurance. 1. Become your own bank with insurance. Have you ever wondered how you can take control of your finances and build wealth without relying on traditional banks? One surprising yet effective strategy involves using whole life insurance cash value. By setting up a whole life insurance policy, you can actually become your own bank with insurance. This approach not only provides financial security for your loved ones, but also offers a way to make money with life insurance while you're still alive. Let's explore how this works and why it's an excellent option for both short-term and long-term wealth-building goals. 2. Building wealth with whole life insurance. When most people think of life insurance, they consider it as a means to provide for their families after they pass away. While this is certainly its primary function, a whole life insurance policy offers so much more. It's a financial tool that allows you to build wealth during your lifetime. As highlighted in the previous section, the secret lies in the whole life insurance cash value. This is how it works. As you pay premiums, a portion of your payment goes into the cash value of the policy. Over time, this cash value grows, and here's the best part: it grows tax-free. Unlike other investment options, such as an IRA or 401k, you don't have to worry about paying taxes on the accumulated money when you take it out. This is one of the reasons why many people view whole life insurance as a viable alternative investment to traditional investments. 3. How to borrow against life insurance. One of the most powerful features of a whole life insurance policy is that you can simply and easily borrow against the policy's cash value. Say, for instance, you need a substantial sum of money for an investment, a major purchase, or an emergency. Imagine not having to worry about whether the bank will approve your loan application or what interest rates they'll impose. And furthermore, imagine not having to deal with all the bank's restrictions, conditions, and covenants imposed upon you in obtaining the loan. Well, I've got good news for you. With a whole life insurance loan, you set the terms. You decide when to pay it back, and there are no mandatory monthly payments. And there are also no restrictions, conditions, or covenants imposed upon you by your insurance company. You're free to do with the money whatever your heart desires, without Big Brother looking over your shoulder. This is the essence of how you become your own bank with insurance. Instead of turning to a traditional bank with all its red tape and formalities, you can just take out a whole life insurance loan from your own policy. If you're asking yourself how to borrow against life insurance, the process is straightforward. Once your whole life insurance cash value has grown sufficiently, you can contact your insurance company and simply request a loan. The amount you can borrow will depend on the size of your cash value, but typically, you can access up to 90% of it. Because it's your own money, you don't have to jump through the usual hoops imposed by traditional lenders. So there's no need for a credit check or collateral. You can then use the funds for whatever purpose you see fit. Whether it be for a business investment, a major purchase like a car or a house, or even for an emergency. Remember, even while you have the loan, the whole life insurance cash value in your policy continues to grow, as if the loan was never taken out. And the policy loan from the life insurance company typically has an interest rate that is on par with the interest rate you're receiving on the cash value. So you're essentially getting an interest-free loan. Yes, there is such a thing as a free lunch after all. 4. Non-direct recognition loans, the smart way to borrow. One of the most attractive aspects of borrowing against your whole life insurance policy is the concept of a non-direct recognition life insurance policy loan. This type of loan offers a unique advantage. When you borrow against your policy, the insurance company doesn't reduce the amount of interest and dividends you earn on the cash value. In other words, your money continues to grow as if the loan was never taken out. Here's how this works. When you take out a non-direct recognition loan, the insurance company lends you money against the whole life insurance cash value of your policy. but it doesn't recognize it as a loan when calculating your dividends and interest. This means that even though you've borrowed money, the original amount in your cash value account remains intact and continues to earn returns at the same rate. The reason for this is that, as I just explained, the insurance company is lending you the money from their own account and is simply using your cash value balance as collateral against the loan in case you decide not to repay part or all of it before you pass away. This feature is a game changer for anyone looking to make money with life insurance. It allows you to access funds for other investments or financial needs without losing out on the growth potential of your policy. You can take out a loan, use that money to invest in opportunities like real estate, the stock market, or a business, and still have your original investment growing within the policy. Essentially, you're using your policy's cash value to fund additional wealth-building ventures, while at the same time, the money is simultaneously generating tax-free interest for you inside your insurance policy. This makes non-direct recognition loans a smart and strategic way to borrow against your life insurance. It's like having your cake and eating it too. 5. Investing in cash flow assets. So, what can you do with the money you borrow from your policy? The opportunities are limitless. A popular strategy is to invest in cash flow generating assets like real estate, high-yielding dividend stocks, or a small business. By doing so, you're essentially using the money from your policy to create additional income streams. For instance, if you take what you are learning about how to borrow against life insurance to purchase a rental property, the rental income from that property can be used to repay the loan. Meanwhile, the whole life insurance cash value in your policy continues to grow, and you're also building equity in your property. This is an example of how you can simultaneously make money with life insurance while also growing your wealth through other investments. This dual benefit of earning money, both in real estate and in the life insurance policy, is a clear demonstration of the compounding effect and the velocity of money. In addition, buying real estate with whole life insurance is very similar to paying with cash. Policy loans are approved almost immediately. Your life insurance company isn't concerned with the projected value of a property or whether it's had a proper inspection. The loan is entirely backed by your policy's cash value, so there's no risk to the insurance company like there would be with a bank when issuing a typical mortgage loan. 6. Stable returns and financial security. One of the reasons why whole life insurance is such a powerful wealth-building tool is the guaranteed returns it provides. Unlike the stock market, which can be unpredictable, the returns on a whole life insurance policy are stable and guaranteed. Many policies also pay dividends in addition to cash value, further increasing your wealth. In addition to financial growth, there's the added peace of mind that comes with knowing you have learned how to borrow against life insurance whenever you need it. This strategy isn't just about growing your wealth, it's also about protecting it. If an unexpected situation immediately arises, you'll have the financial resources to handle it without dipping into your savings account or taking on high-interest credit card debt. 7. Providing for your heirs and leaving a legacy. While we've focused on the living benefits of whole life insurance, it's crucial not to overlook its role in protecting and providing for your heirs and leaving a legacy after you're gone. Because the policy's death benefit is tax-free, your heirs can receive a substantial inheritance without the burden of taxes. And if you pass away with a cash value loan still outstanding, that amount will just be deducted from the face amount of the policy when paying the proceeds to your beneficiaries. This is yet another way that a whole life policy helps make money with life insurance, not only for yourself, but also for your heirs and their futures. Happy planning!